Today, Bitcoin jumps back above $100,000, and Blockworks co-founder Jason Yanowitz shares his outlook for the crypto space in 2025. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto markets on the rise this morning to kickstart the week. As of noon Eastern, Bitcoin jumped 4.25% to the $102,000 level, its first time above 100K since the middle of December. Ether rose 2.33% to $37.10, and XRP climbed 3% to $2.44. All right, jumping into our main story, I spoke with Jason Yanowitz, co-founder of the digital assets media firm Blockworks. We spoke about his outlook for the crypto space in 2025. All right, Jason, thank you so much for joining me on Crypto World today. A really exciting year ahead, probably, if the post-election rally is any indication. And one trend that we, keep hearing about, obviously, is adoption. So, what do you think Bitcoin adoption in 2025 is going to look like? And are you looking more to the institutions or to the retail side?
I think both are important. So first off, thank you for having me. I think it's important not to overthink what has happened in the last 90 days, right? There's the single greatest takeaway that I think anyone can have is that the US is the most important capital market in the world, and the US is now favorable towards crypto, right? Really, for the first time in history. We've been building Blockworks for this is our 8th year now, and it's the first time that the US has ever been favorable towards crypto. So when you start to think about adoption, I think there's probably two ways to bucket this. There's the institutional adoption and the kind of more consumer and product-led adoption. On the institutional side, 2024 was a year like none other. There's probably more institutional adoption last year than any of the past 15 years of the industry combined, right? BlackRock, Visa, Franklin Templeton, Fidelity, the Bitcoin ETFs, the Ethereum ETFs, et cetera. And then on the consumer side, we saw stablecoins grow by orders of magnitude in the last couple of years. So yeah, it is an exciting time to be in the industry.
Any particular trends on the product side that you're watching? Last year for us at least, it was very centered around institutions and the ETFs coming out, and then the conversation around the regulatory environment towards the rest of the year. We're talking about, are we going to see Bitcoin in more retirement accounts? But on the innovation front, it seems like every time we do go through this bull run, there is something on the innovation and product side that comes out, be it Coinbase, be it Ethereum. You mentioned stablecoins, which I do want to talk about a little bit more later, but is there an emerging trend on the product and innovation side that you have been watching?
I mean, outside of stablecoins, if you want to touch on that later, the biggest thing is just on a macro level inside of the industry, there are now, for the first time ever, real businesses being built on chain, right? So if someone's not super familiar with the industry, for the first time ever, these protocols, which kind of feel like these weird esoteric things, are now generating real financials, right? They have P&L statements that look like real businesses. They have financials, there's revenue, there's expenses. And I think that it's clear that we can say for the first time ever, on-chain is the new online, right? You used to say maybe 20 years ago, oh, look, one of those internet businesses. Now it's just a business. And today we say, look, one of those weird crypto businesses. And I think tomorrow it'll just be a business. So if you're looking at big trends, I mean, stable coins and kind of real world like payments adoption, I would say is a big one. DPIN is definitely going to be a big one. And then I think the broad set of consumers in at least the United States are starting to get a little bit fed up with the big tech conglomerates and the big tech giants, the Facebooks and Instagrams and Metas and Googles of the world. And I think you'll start to see SocialFi become one of the big trends of 2025.
Talk to me about this idea of a strategic Bitcoin reserve at the federal level. Its existence isn't really in contention, I think, in the same way as other networks and cryptocurrencies have been under the current regulatory regime. So what, beyond watching the Bitcoin price go up, to what extent do you think that changes around that theme in Washington matter for Bitcoin? It seems like Bitcoin has already been de-risked,
Yeah, I would say it's incredibly important. So it's not the most important thing, right? We already We have a pro crypto president for the first time in history. We also, outside of Trump, we obviously there are other aspects of Washington. We have a pro crypto Congress for the first time in history. We elected 278 pro crypto folks to the House and 20 pro crypto folks to the Senate. But on the Bitcoin Strategic Reserve, what this means is that we are going to use, at least the proposal set out by Senator Lummis, is to use existing funds at the Fed and at the Treasury to purchase 1 million Bitcoin. That's not $1 million of Bitcoin. That's 1 million Bitcoin. That would make us the largest nation state holder of Bitcoin. It would give us about 5% ownership of the entire network, which might sound crazy to folks, but it's actually on par with kind of our total share of the entire gold supply in the market. So if you look at Polymarket today, there's about a 29 to 30% chance that the US government actually launches this strategic reserve. And I think if you look at this kind of 30% odds that this happens, Bitcoin's trading at around $100,000 today. I think if the Bitcoin Strategic Reserve actually got put into place, you'd quickly see Bitcoin shoot up to prices around 200,000, 250,000. And it wouldn't be the first time, right, that the U.S. government had held Bitcoin. I think we hold around 200,000 Bitcoin today. So I think that at the federal level, that's really interesting. And then I think you'll start to see it at the state level as well, right? Pennsylvania just introduced an act that could allow them to invest 10% of their state's treasury into Bitcoin. Michigan and Wisconsin now hold crypto on their balance sheet, in their pensions. Florida's not far behind that. So I think the kind of nation state game theory is actually starting to play out. And you've got this kind of scarce asset, insane demand. And I think folks can start to do the math on what happens next.
What's your outlook for Ether? And how does that token break away from the narrative that it sort of suffered in 2024, really lagging behind tokens on competitive networks? There were questions around use cases, which was a funny thing to me because for all of the debate around whether Bitcoin is a risk asset or store of value, it seemed that there was a while there where investors could more easily wrap their heads around the case for ETH. And then during the summer doldrums there, that just kind of went out the window. So a lot of room for a comeback here in 2025 for ETH, I would think. What do you think?
I think ETH could have a really interesting year. So ETH kind of sits in the middle between these two networks, right? Bitcoin is this store of value network. Solana has become kind of this fast blockchain that can enable a lot of consumer use cases. But what people forget, because Ethereum's price hasn't moved as much as the other two, is that Ethereum still commands a lot of the assets that are stored on blockchains are still stored on Ethereum. And Ethereum has this very wide network of what are called layer twos, right? Coinbase decided to build their blockchain called Base on Ethereum. There's Arbitrum, there's Optimism, there's Polygon. These are all built on top of Ethereum. So I think the thing, there's people in the industry oftentimes like the new shiny thing, but I think Ethereum is set up for a really interesting year, especially if they can start to change, get a little bit more product focused and a little more focused on the applications that are building on top of the network instead of just the core underlying infrastructure.
Let's go back to stablecoins. What are you expecting to see this year? Historically, I'd say stablecoins are used for trading more than anything else. And you and I know that that's just not true. There are several other reasons to use stablecoins. I think that they are growing use cases. So do we get away from that trading narrative a good amount this year?
Yeah, I think stablecoins are the most interesting thing in crypto right now. And it seems a little bit boring, right? Moving dollars onto a blockchain. But if you start to look at the data, it gets really interesting. So stablecoin transaction volume in 2020 was 550 billion. Last year, it was 5.5 trillion, right? So we 10x'd in the last 4 years. If you look at transactions in 2020, there were about 80 million transactions, stablecoin transactions. Last year, 1.25 billion, right? So that's a 16x in 4 years. And then the total supply of stablecoins has grown from 10 billion in 2020 to 200 billion, where we're sitting at around today, which is a 20x in 4 years. And the reason for this is the world spends more than $55 billion on remittances today. So you talked about stablecoins. The last couple of years are primarily just used for trading on exchanges and things like that. I think what stablecoins will start to do is cut away at this 55 billion that we globally spend. That's kind of just what I would call waste spent on payments. 55 billion on remittances. Sending $200 internationally costs on average for each person 6.5%. So stablecoins wipe out that 55 billion on remittances. They bring the 6.5% spend down to less than 1%. So I think that's probably one of the largest impacts that the industry will have on the rest of the world is stablecoins. And I think you can start to see it in the market is waking up to this, right? Stripe acquired a stablecoin company called Bridge for over $1 billion. Stablecoins are now one of the 20 largest buyers of U.S. Treasuries in the world, behind and in front of some of the largest nations in the world. And so stablecoins are not only helping drive payment costs down, but they're actually exporting dollars through this form of buying treasuries and exporting them to the entire world. So very interesting to see what happens with stablecoins.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.